We're talking markets, margins, macroeconomics, and more today on the Uplevel Dairy podcast. And did you know that during this Christmas season, 1 out of every 4 consumers walking through the mall has yet to pay off last year's credit card debt? Consumer trends are just one of the things we'll be diving into this conversation today with Curtis Bosma from HighGround Dairy in our December monthly market update report. This episode is brought to you by HighGround Dairy. HighGround Dairy provides global dairy market intelligence, insurance services, futures and options brokerage, and advisory programs to a diverse range of dairy market participants throughout the supply chain. Information shared in this podcast is for educational purposes and is not a solicitation to buy or sell commodities. Opinions expressed are current opinions as of December 18th, 2024, and only represent the views of the speaker and not those of HighGround Dairy Trading unless otherwise noted. Now sit back and catch up with the December monthly market update from Curtis Bosma at HighGround Dairy. Welcome back, Curtis, with a December monthly market update from HighGround Dairy. Curtis, what's been going on in the markets in the last month?
Well, there's a lot to cover this month. We've had a lot of price action with prices coming up, prices moving down, all sorts of volatility, all sorts of new political headlines. I'm going to put a little disclaimer out for myself. We're recording this the day before the November USDA milk production report. So I'll talk a little bit about October. We'll get into what I think we may see in November, what our team's been following closely, and then also what we're kind of seeing for 2025 as well. So the October report, we were still slightly higher year over year overall US, but we did see a significant pullback in certain states. So specifically California. We know that the impacts of bird flu have been weighing pretty heavily on the milk supply out here. But some of the other states where there has been announcements about processing capacity expansions over the last year, it's amazing the correlation between when plants are announced and when dairies show up. So places like South Dakota, Kansas, Texas are all showing some pretty significant expansion there in terms of milk production, which for October offset the losses that we saw in the state of California. Looking ahead into the November data, I would expect, just based off of conversations and what we know about the impact of bird flu in California, that the numbers are going to be even worse for the month of November in California. I wouldn't be surprised to see something quite negative in the report that's going to be released tomorrow. With that, our team has been looking closely. We would have expected to potentially see this growth pattern continue just because of those new dairies that have come online in states where there is additional processing capacity. But because of how hefty some of these projections are for what we could potentially lose from a production standpoint in California, I definitely think we could see a negative number in terms of overall U.S. milk supply year over year. We'll be anxiously awaiting to see some of that data tomorrow from USDA. We had pretty consistent declines throughout a lot of this year. I know 2023 was an overall difficult year financially for dairy producers, and following a difficult period for finances, we do see some contraction in U.S. milk supply. Things like the strength of the beef on dairy market, which led to increased culling in 2023 and brought on kind of this tight heifer situation, increased cow values. There was a lot of incentive, I would say, early on this year and kind of the mid part of this year for an exit plan if there was no succession plan for producers. So we did see a fair amount of that, which led to some of that negative year-over-year milk production. I think we always look at the USDA milk production number, the year-over-year number that's announced every month, as sort of our guiding principle of what's going on with the U.S. milk supply. We don't get paid simply for gross pounds of milk. We get paid for the components being produced. If we look at the component makeup of milk, this has been something all producers have been working towards for quite a long time. Butterfat production, protein production, all these things have been moving up to the point where even though we saw declines year over year in milk production throughout 2024, we actually had an increase in overall butterfat pounds being produced. That was kind of an interesting thing to be tracking. USDA does not publish the butterfat content of milk in their monthly milk production report, but in the monthly ag prices report, they do publish a state by state and a national fat content in milk. So by combining the data, we can see what the overall butterfat production was. Like I said, it's been trending higher year over year, which has kind of been a little bit misleading when you look at some of these production numbers.
So, Curtis, as you're talking about those trends in butterfat, this is a great time to talk about what's been going on in the marketplace with butters. Give us the update there.
So looking at the butter market here over the last couple of months, from a production standpoint, we have seen a lot of additional cream hitting churns. That's been a consistent trend with the increased butterfat output. We have had solid demand domestically, but because supply has been outpacing demand, the last resort for cream flows is always to just hit the butter churn and ultimately be put away in inventory. So we've seen those start to build up a little bit. I also think when we look at it from the demand perspective, specific to butter, the last calendar year where we did not surpass the price level, go above $3 per pound, was 2021. So it's been a while since we had a full year where if you're a commercial buyer, you've been able to budget and not have to worry about the potential for $3 butter. If you're a commercial butter buyer, it's like the old saying, fool me once, shame on you, fool me twice, shame on me. I think after being put into a situation where we had butter prices over that $3 level for a couple of years in a row, there was a lot of front-loaded purchasing this year. I know we had talked about the butter market throughout this year where it was sort of this orderly rally. It was never really a doubt that we were going to get to some historically high price levels, but I think buyers have been learning over the last couple of years of there isn't as much replaceability for butter. We used to be able to trade into vegetable oils, margarine, things like that, but now there's really no substitute for butter anymore from a consumer standpoint. So with that, a lot of the purchasing patterns we saw early on in the year was to just not get caught with that $3 plus butter, which when we got to our seasonal highs, when holiday purchasing ended, we saw a pretty large reset in butter prices. So we saw the spot prices tumble down to some lower levels here. We were over $3 a pound, as I mentioned, but now we got into this low we reached recently was 246 and a half. That was a significant tumble from where we were at in this post-holiday thing as we're kind of looking forward into the next year with increased production specific to butterfat, as we've been talking about, and inventories where they're currently sitting. Our team's been thinking that it's somewhat unlikely that we see a $3 plus number in the calendar year of 2025. Our expected price range is 230 to 290 range. I know there's been some extreme numbers thrown around by industry people saying that we can see sub $2 butter, but I think with that kind of inelasticity of demand, it's going to be difficult to see a lot of downside in that.
So that's the butter market recap. How about cheese?
Cheese has seen a similar reset to what we saw in butter. We got to the end of the holiday purchasing window and we tumbled down to some lower price levels here. So we got to an all-time high for CME spot barrel cheddar. And now we've seen a reset down into the 170 level for that. Blocks bottomed out at around 163. We've kind of recovered since to about 180. When we get to these lower price levels, some interesting things happen. We start to reopen export opportunities compared to the rest of the world. When we had our reset for prices here recently and we got to some of these lower price levels, it does open the opportunity for us to be able to export some product. That being said, that door is starting to slightly close on us here as we've seen European cheese prices start to converge lower with our US cheese prices. So at a certain point, it may become more difficult with the increased processing capacity coming online. That's going to prevent us from having any major pickups in the ability for prices to really, really run in 2025. So I think we're still sitting at some pretty good levels now. If I had to look into my crystal ball for 2025, I think we're going to have some difficulty maintaining some of those longer term rallies based on all this additional processing capacity that we're going to have, kind of open to the market.
And Curtis, what else has been going on in the markets with some of those core dairy products that we look at?
We covered butter and cheese, two of the core four. Moving over to non-fat dry milk, this has been the most boring market of the four. We had some upward price momentum earlier on in the year, but I really haven't seen much traction to the upside here. What I will say with regards to the non-fat dry milk market is because we've had a lot of demand for other types of milk protein concentrates and things that are not just commodity style non-fat dry milk or skim milk powder, we have diverted a lot of production away from that. So when you look specifically at the balance sheet for non-fat dry milk, and we publish that balance sheet in our monthly market update, supplies are lower, inventories are lower for dried skim solids of milk. This is going to be more susceptible to some upward price movements. We're also moving into a new administration, so we're going to have some political challenges potentially ahead with regards to tariffs and other things like that. That market seems to be pretty quiet at the moment. And then lastly, I think we can lead into this. I know this was something on the podcast that you just had with Ted Jacoby talking about the dry whey space. Normally, over the past 3 or 4 years, dry whey's kind of been the boring one that we don't talk about that often. It trends higher for 20 or 30 weeks in a row, and then it reverses and moves lower for 20 or 30 weeks in a row. So it doesn't really get as much attention as cheese or butter or some of these other commodities that can shake markets up. But when you look at what's going on with this high protein whey market, so all the WPI, WPCs, all the different things that fall into that whey derivative stream, the demand for that just seems to be insatiable. I think the product claim of the 90s and early 2000s when you walked through a supermarket was always reduce fat, or the big number we always talked about was the fat content. Now we've kind of debunked to realize that this fat stuff's really not that bad for you from an overall health perspective, but we're probably not eating enough protein. So now when you walk through a supermarket, you see everything. Their big label claim that's always in bold, it has the biggest font, is always how much protein is in all these products. The easiest way to get a good, solid, digestible protein into anything is to put some sort of whey protein concentrate or whey derivative in there. We're seeing a lot of demand from these big CPG type companies to put some sort of dairy protein, even if it's just a little bit of whey powder, to boost the overall protein content into cereals, snack foods, anything that you could do. And that's something that we still have yet to be able to really figure out the total capacity of demand there. But I do think it's an interesting trend to monitor because it's certainly changed the way we think about the market and the way we think about dairy proteins as a whole.
Curtis, you've recapped what's been going on in the marketplace with our core dairy products, but something else I wanted you to expand upon this month are some of the things that are going on that are beyond the markets, but definitely impact the dairy farmer's milk check at the end of the day.
We are susceptible to a lot of headline risk at the moment. To kind of break it into some different categories on the consumer spending front, the thing we keep talking about is consumer credit card debt and the consumer debt crisis that's really emerging through all this. I think we've now reached almost $1.2 trillion of overall credit card debt in the U.S., a record high. In our monthly forecast, we were covering how a lot of consumers around the holiday time will purchase things that are maybe a little bit beyond what they need, put those things on credit cards. There was a consumer report that was recently released showing that still there was about 28% of consumers that had done something like that are still carrying their holiday debt from last Christmas. Over 11% of these delinquencies are over 90 days, categorized as a severely delinquent period. And the average interest rate on these things is in excess of 23%. So that's an average just interest balance per person of over $7,000. So consumers are not in a great position right now to be out eating at restaurants. Food service has had some challenges. Quick service restaurants have been extending their meal deals. We've seen a lot of big chains that have had a long-standing history of great success, either closing locations or filing for bankruptcy altogether. So there's been a lot of challenges being presented to the food service sector. And with consumer spending creating this sort of debt crisis, we're going to continue to have these challenges for the foreseeable future.
Wow, Curtis, those are some compelling statistics. And in this pre-Christmas season, to really consider that, essentially, as you shared, about 1 out of every 4 people that you pass by, if you actually go to a brick and mortar store, 1 out of every 4 hasn't paid off the holiday from 2023. No doubt these things are going to impact overall spending for restaurants and eating out. And so when you look at that shift and change, are you seeing that on the major retailer side with some of our larger store chains?
Yes, on the retail side, I know we had some call outs from our last forecast. Target's been going through some different price cuts. Walmart's been seeing most of their store traffic increases coming from higher income households. The restaurant food service sector, again, is increasing promotions, extending things through the end of this year just to keep traffic coming in the doors. And I think they're just trying to make sure that even if there's limited availability of discretionary spending from consumers, that they're at least keeping people's attention and keeping them coming into the store at least.
So it's some interesting trends, especially in the holiday season, as you talked about, Curtis, when we look at the habits and what that's also created with consumer spending on both the food side and the retailer side. And that's not the only thing going on outside of the markets that's impacting dairy farmers at the end of the day. There are some things going on politically as well when we get into policies. So let's talk Farm Bill.
Oh boy. Farm Bill is potentially going to get a stopgap just to get us through the next year. The big headline is the potential for $10 billion in direct payments to farmers. Among farmers, this is a very contentious topic. Most farmers are probably of the opinion that they don't necessarily want direct payments. They'd rather have a fair price to market their commodities and sell their crops and things like that. But sometimes in difficult economic situations, there's really not a lot of options and a lot of doors to open in terms of that. I know the Farm Bill, we're basically at almost the deadline. I think Friday night is the deadline for the government to actually shut down. And then we may kind of stall things out from there. But they're voting here soon on this. Again, disclaimer of casting some opinions without knowledge of what the vote may turn out to be. But with that, there's definitely some interesting things that are going to be affecting the agricultural space as a whole. I think a lot of people, at least right now, are of the opinion that the U.S. agriculture sector is either in a recession or at least nearing a recession, just based off of how low commodity prices have fallen for different row crops and things like that. From a margin perspective with dairy producers, that sounds like a very positive thing, but we do need fair prices for everybody to continue to grow these crops, continue to fuel these legacies and families that are working the fields and ultimately feeding this nation.
But what about dairy? What about some of the specific things that typically are included in the Farm Bill that are for dairy producers?
Yeah, so there's a couple of interesting things up at the moment. There's a program called Cooperatives Working Together, or CWT, which is an export assistance program. It is scheduled to be renewed every 3 years, and 2024 is a renewal year in that cycle. There's been a lot of debate among different cooperatives about the potential benefits of this, and maybe certain players have been benefiting more than others. Because of these tensions, it's looking like the renewal for this program, at least as it stands now, is somewhat unlikely. When we're looking at exports, I know we were talking earlier about some of the recent activity with things like cheese. Because there is a lot of uncertainty about the future existence of that program, there's been some people really pushing through to make sure that, hey, if this program is no longer going to exist, if we have available funds to make sure that we can make a benefit now before this program ceases to exist, we better use those funds. We better get some exports going. So there may be some of that activity taking place, spurring on dairy exports, at least for the time being. The dairy cliff, which is being talked about a lot, was a purchasing assistance program from USDA. It really has not had any major impact, but it will be something that we continue to monitor going forward. I know that's been something that's existed for well over 100 years now. So if there are any changes there, I would be shocked to see any of that stuff. We will see what comes of that. I think it's unlikely that we get a longer term farm bill, at least until there's a new administration in place. Because we're in this weird transition period, it does make it a little bit more difficult, I think, to get things through, and at least things that have a longer term viability to them. But since there is so much contingent upon this farm bill existing, there's going to be a lot of posturing over the next couple days. I would assume there's going to be a lot of Starbucks drinking in Washington, D.C. by our legislators.
Let's just hope that they're putting a little extra cream in all that coffee.
Exactly.
Curtis, appreciate you giving us the update, not just on the markets, but also just the broader outlook on the economy as well as what's going on with policy. And while I have you on today, I wanted to, first of all, give you a thank you for recommending a guest that we just had on our last couple of episodes, Ted Jacoby, the third generation to be at the helm of TC Jacoby. And essentially, that is a dairy marketer, a dairy trading company that you work closely with. So thank you for the recommendation to have Ted on as a guest. Fantastic guest as he talked about milk markets and what has been going on in his 35-year history at the company. We also had a great conversation on what it's like to be the third generation in a family business and how he's positioning that for the future. I also want to invite you, Curtis, to shine a little bit of a light on the role that a company like TC Jacoby plays in the overall movement of milk and how that is impactful to the dairy farmers.
I was glad that Ted was able to jump on the podcast. He did an excellent job at, breaking down what it is that they do. And I think it's important for dairy producers to understand as well, because I grew up on my family's dairy farm here in California. Milk leaves the farm, and there's always this uncertainty of what happens next. He did a great job of breaking that down and explaining that it's not a simple process. There's a lot of hands, there's a lot of costs that gets added to products as you're moving things around, as you're ultimately trying to find the final destination for demand or consumption. And a lot of conversations with producers unravel the complexity of dairy supply chains and breaking down, okay, you send your milk to a cooperative or to a processor, it gets made into a finished good, then kind of what happens next. And typically it gets a little bit more confusing from there, and there's a lot of things that can happen. But the role of these merchandisers balancing supply and demand beyond the farm is essential to our industry. And I think when you think of them as middlemen, you discount the importance of what they're actually doing. Because essentially when your processor or cooperative is taking your milk and converting it into a finished good, they also have the obligation to pay you for your milk that went into making that product. When they don't always have a sale or the ability to get that to a customer, they may have excess supply sitting around, they still need the capital to write the milk checks every month. It's their biggest expense that goes into it, is being able to pay for the raw milk that came into the plant. I think there's been conversations that I've had with producers where they're kind of like, hey, why can't my cooperative just hold on to that inventory? Why does it have to go to a middleman and be converted into cash so quickly? The challenge with that is if they don't have access to the capital or liquidity to consistently pay you for your milk every month, you could turn around from the processor standpoint and say, okay, we'll hold on to it, but we can't pay you for your milk until we make a sale on this excess inventory. The role of these merchandisers that are essentially picking up the balance of what maybe hasn't been sold from processors and manufacturers, finding a home for those finished goods, it ultimately adds value in the service of being able to keep everything moving. Because if we sit still in the supply chain and we don't have that, then we miss out on tons of efficiency.
Thank you for sharing some of the insights of the importance of that middle person and making sure that milk has a home after it leaves the farm and that there's a destination for it that's going to turn it into a product and add that value back to the producer. Curtis, it's been great to once again have you on for our December monthly market update from HighGround Dairy. Anything else you want to add this month?
I'd encourage any producers as we enter some of these holiday weeks and reflect on this past year, if you're considering, hey, maybe I should get a little more proactive in managing a margin, especially just given that the opportunities are so good right now, to really consider which advisor may be a good fit for you. We talk about this quite extensively, Peggy. With a company like HighGround, we service not only the dairy producers, but we also cover the entire dairy supply chain. So the ability to know what's going on at each level of the supply chain, the information that we are able to glean from conversations with not only dairy producers, but also dairy product merchandisers, people on the consumer side, those sorts of things really help fuel the ability for our team to provide good insights and advice and deliver that value to the customer. So as you're thinking about, hey, who should I be talking to? Who are my points of contact when I'm looking for good quality information? I really encourage producers to keep that in mind. There's a lot of people out there that are trying to polish the crystal ball, look at all the available data that USDA, CME, all these different sources give us, which is great to have. But ultimately, the actual conversations that we're having with people that are doing the business, that are actually buying and selling these products, dealing with it on a daily basis, that is so valuable to us to get a better understanding of what's going on in real time and be able to validate some of the opinions that we have on the markets and then be able to deliver those opinions to our clients in the form of our advice.
With your contact information as well as a monthly download where they can get some insights into HighGround Dairy and some of the market intelligence that you and your team are tapping into on a monthly basis. And so with that, thanks for jumping on with us for this December monthly market update, Curtis.
Thank you, Peggy, and everybody have a great Christmas.
Yes, same to you. And a Happy New Year. We'll see you back in January. You just heard from Curtis Bosma with HighGround Dairy. For more information on HighGround Dairy or for their monthly market download, check the link in our show notes. I'm Peggy Coffeen, and thanks for listening to the Uplevel Dairy Podcast.